Welcome back friends for yet another update from the world of EV stocks. In this channel we try to put up analysis that doesn't only keep you ahead on the news front, but also helps you have an intelligent understanding of the investment opportunities in the EV space. We'd also like to mention here, that we've noticed most of our viewers are not yet subscribed to our channel. We'd therefore encourage you to subscribe to us, for regular information and analysis on NIO, Tesla or XPeng stocks. We received the inflation data from January today, and in spite of a slight slowdown in activity due to Omicron, CPI inflation rate came in at 7.5%, which is higher than previously anticipated. This all is pointing towards the market risks we have been talking about in this channel. Markets today initially didn't react too negatively to the news, but very soon we started getting more hawkish messages from certain Fed officials. Nasdaq in the end fell 2.1%. St. Louis Fed President James Bullard threw his weight behind the idea that the Fed should hike rates 1% by July. Many market participants now expect an almost certainty that Fed will act more hawkishly in March. A less likely scenario of the Fed calling an emergency meeting and suddenly hiking rates is also not completely impossible. Now, the question is what is likely to happen to our favorite growth stocks such as NIO or Tesla in this environment? Well, we believe that the cloud over growth stocks will only subside when the inflation data starts to improve, and currently there is no sign of that. We don't see inflation data improving in February or even March. That means, the potential upside in stocks like Tesla is most likely limited for the time being. If you are buying Tesla stock at $900 now, assuming it's going to run up to $1,000 or more very soon, most likely you will be disappointed. On the other hand, as the inflation spiral continues to go out of hand, and the 10-year Treasury yield keeps climbing higher beyond 2%, we obviously will have more downside pain in stocks such as Tesla. Tesla is an extremely overpriced stock with a very high multiple, and generally when monetary tightening cycles begin, such stocks have the highest risk of getting priced downwards. So we clearly see Tesla not going too far up in the current environment, but quite possibly crashing to $800 or $700 or perhaps even lower if there's worse inflation data and more Fed hawkishness in the coming weeks and months. Thanks for tuning in to this video. If you'd like to hear more such neutral and realist updates on the market and stocks, don't forget to like this video. Until next time, we wish you have a nice day.